Welcome everybody. We are pleased to host our first webinar discussion on Google Hangouts with one of our network partners, Beco Capital. So today we have with us Mr. Yousef and Mr. Sorusch, who are joining us all the way from the UAE to discuss venture capital and fundraising. So Sorusch and Yousef, I'll give you the floor just to introduce yourself for a bit to the audience.
Sure. Get started. All right. Bismillah ar-Rahman ar-Rahim. So, as Maryam mentioned, we're both based in the UAE, but we're both not from the UAE. And I'm from Saudi. I was born with Saudi. I was raised all around the world. I studied finance in undergraduate, and then I turned into entrepreneurship. Started multiple businesses, from food and beverage to event management and brand activation to viewer-based or user-based feedback apps to industrial chemicals, and after that, or somewhere in between that, I joined one of the largest corporations in the world, General Electric, where I've worked in mostly two departments. One is their sales strategy for their aviation business, and the second was their investment banking unit with a joint venture with the Abu Dhabi Sovereign Wealth Fund Mubadala. And in parallel to that, I missed my entrepreneurial days, so I started angel investing, mostly global outside of the region. And that's when I started meeting the Beco team. The investment ecosystem is small, and I started meeting the team, and we started discussing and debating the opportunities of investment between international market and the local market. And I was convinced, obviously. So and I jumped ship, and I'm now.
Hello everyone. My name is Sorusch. As just Yousef said, so I was born and raised in Germany. I'm originally from Iran. I moved to Dubai actually to work with Beco about 2.5 years ago. Before that, I worked with a venture capital company in Germany called Early Bird, where I was based in the Munich office. And before that, I was a first-time entrepreneur. I started a travel tech company out of college. I studied economics at Columbia University in New York, which is where I fell in love with entrepreneurship. And so sort of been passionate about the hustle of entrepreneurship for quite some time now, and honestly, the Middle East is becoming one of the most exciting places for that hustle, and happy to share some of our thoughts and answer questions during this medium.
Excellent.
Before we jump into questions, Miriam, I thought maybe we'll just give a very quick brief about Beco itself. So now
please do so. Yeah.
So Beco Capital is a venture capital company that invests in technology startups that are based in the Middle East, and it invests in companies that are between seed to Series B. And we have a portfolio of about 10 portfolio companies so far. The largest two being Careem, the passenger marketplace, and Property Finder, the largest real estate classified listings in the region. We're a team of 6 investment professionals and another 6 non-investment support teams. And we've been around since 2012 late 2012. So this is a little bit about Beco Capital.
That's very nice. All right, so we've received a couple of questions from our entrepreneurs. So should we start with the first question?
Sure.
Okay. So one of our fellow entrepreneurs was asking, when is the right time to seek funding? At what stage?
So first of all, it's a great question, very simple, but actually quite profound. So it really depends on the profile of the business. I think as Yousef and I sort of introduced, both of us have been in the shoes of entrepreneurs before, and it's not been that long ago, so we kind of empathize with entrepreneurs a lot. So let me really put this from an entrepreneur's perspective. You want to go and seek funding when you are in a strong position to actually dominate the negotiation. Now, it sounds funny that this is coming from 2 people that are working for an investment company, but you want to go out there, first of all, when you actually need funding, So that means, have you built a product, if you're at the seed stage, that has proven to have some sort of product market fit? Is it solving a problem for people? Are people using it? Are people saying, I love this, I want more of it, can you build this, out? Can you develop this for me? So if you have sort of approval from the market that people want this, that's, first of all, at the seed stage, a good time to go and say, hey, I want to raise, like, let's say $250,000 to, hire, further sort of resources to help me really develop this. At the later stages, such as Series A, which is one of the stages that we focus on, you want to raise when you have really proven product market fit, you have a business model that is working, and you know exactly that if you raise another $1.5 million, you're basically going to fuel the machine, right? So at every stage, come when you are ready to be in a position of power and say, listen, these are the things that I was testing, I've proven it, and now I need money to do X. If you cannot articulate your needs for funding as clearly as possible, it's going to be difficult to have a productive conversation with us, and it's going to be even more difficult to actually raise funding from a venture capital company.
Okay, that's great, that's excellent. Okay, well, I guess this will actually direct us to the next question we have, which is how to actually attract investors to invest in a new idea.
That's a very tricky question. We always think about, we always say to entrepreneurs that focus on your product, focus on your business, and build it, and they will come. I think that's the biggest piece of advice that we can give you. To attract investment, you have to have the right business, you have to have the right product, it has to be smart, it has to be transformational, it has to be scalable, it has to be in the right time. So there's a lot of things that needs to be right, but it's all about the product and the business. So really focus on building your business, really focus on building your product, and then you'll be able to raise investment. Now, there's an investment process that you have to go through, especially in the Middle East, where typically you would be raising funds from family and friends in the beginning, and then angel investors, and then moving on to venture capitalists. If you look at the first two, family and friends and angel investors, in the Middle East, they're typically investors in real estate and public equities, and they're not really versed with the technology or the entrepreneurship world.
Yeah, it's just that they're doing it just to actually, if it's a parent or a friend, just to actually support you, but not for the fact that they're actually interested in the product or service you'll be offering. Yeah. Exactly.
So you have to hustle a little bit. I mean, you have to go through a process of education. You have to educate the people sitting in front of you. Why is this the right opportunity? Why is this the right time? Why is this the right business? But if you haven't built a right product, or a good base for your business, I think attracting an investment will be very, very difficult.
Okay, that's great. That's excellent. Another thing is, what sorts of deals do you look at in the current market? I mean, when you're looking to actually invest in a certain company or project idea, what is the main thing that you actually look at? I mean, are there certain things that you're currently focused on, or something that is a winner, let's say, in the market?
So I guess there's two things we look at, right? I mean, there's sort of like sectors that we're really interested in, and then there's sort of like, broadly speaking, a framework that we apply when we decide what types of companies we find interesting, right? So maybe we'll start with a more foundational question, which is like, what do we look for when a new idea, with a great entrepreneur approaches us? And it's really, broadly speaking, four things. The first one is we look for a kick-ass team, right? We really look for a team.
Can you say kick-ass?
Is this okay? Can we use that word? It out afterwards, right? But I'm using this word intentionally because it kind of like, I want to stress the importance of having a team that is extremely strong, that is passionate about solving this problem, that has the right technical skills to solve, build a solution for this problem, and that has the drive and the persistence and the hard work necessary, to execute, right? So that's why, I kind of use that terminology, because it's really important to have a strong team. That's really one of the first things that, Yousef and I always talk about. Like, when we get out of a meeting, one of the first questions we ask each other is like, would you follow this entrepreneur into war, right? Like, you know, is he that type of leader that you could get behind? Because that's what we do really at the end of the day. We get behind strong leaders. The second thing that we look for is, you know, a transformational solution, right? So is the product that they're building solving the problem, you know, in a way that makes it significantly better than the solutions that already exist in the market, right? So it's not enough to have incremental self-improvement. It needs to be something that is really transformational. You know, we use that word a lot, and it matters a lot to us. You know, like, is this a product that people would just love to use? Because nothing that they're using right now solves their problem the way that this is solving the problem. And the third thing that we look for are really, you know, interesting and, you know, big markets, right? And it's important to put that into context, right? Because a lot of people always think, you know, oh, big market, if I do something in F&B, you know, food and beverage, that should be big, right? Because that's like a God knows how big, you know, opportunity in the region. But that's top down. That's sometimes very deceiving. So when we talk about market, we really talk about like bottom up. Let's really think about what problem your product is solving, and let's start counting noses and understanding how many people really have this problem. How much would each of them pay for it? How often would they pay for it? And hence, what is your revenue potential on an annual basis? And what we love, actually, and this is something that we have learned over time, is that the market doesn't have to be massively huge from the beginning on. But if it's growing 15% year over year, that is extremely exciting for us. And the final thing that is really important to us is defensibility. So, you know, once you have a very strong team that has developed a transformational solution in a market that is growing rapidly, it's important to have defensibility in the model such that you can stay ahead of the game over the long term. Because we're investors that don't expect to get, you know, dividends over the next like 1 or 2 years, right? This is not real estate investment. This is long-term investing. We're patient capital, and so we need to make sure that over the next 7 to 10 years, this company is continue to grow, is going to continue to grow and be a big and competitive player in the market. And for that, it's important to have things like network effects. You know, when it comes to marketplaces, you know, Yousef mentioned we have invested in Kareem and Property Finder, which have network effects, obviously. It could be things like lock-ins. You know, we have invested in a company called Mikey, which is a cybersecurity company out of Beirut, that is, you know, targeting, you know, enterprise clients to help them with managing their online profiles and eliminating the need for passwords for them. So that's a lock-in, right? Once you're locked in from a SaaS solution, so defensibility is the final thing that's really important.
I guess, look, if you wanted to think about defensibility as an entrepreneur, ask yourself a question. If a company comes in, either started off fresh or came in from the US or Europe or whatever, and you have 2 million in the bank and they have 4 million in the bank, are they able to eat your market share or not? If they're able to eat your market share, you're not purely then you're not defensible.
Okay, that's very interesting, actually. I mean, it's good for entrepreneurs now to know to look for the 4 things that you guys have mentioned. And this just takes me, like when Sorusch said that when you leave a meeting, you say that, are we ready to go into war with this team? So did you make any good deals this year?
So I think this statement is by Sorusch. He always asks the question, are you willing to follow this team to war? And it really brings us back to reality. And it sets us, we get really disciplined in our decision making. So just to tell you a little bit about how we filter through, right? So in 2012, we've seen 80 deals. In 2015, we've seen 450 deals, for example. These are investment opportunities that come to us. In 2012, out of these 415, probably 120 made it through the first funnel. So very light review. We've had a call or a conversation with the entrepreneur. 30 or 25 of those have actually made it to deep technical review. So we've gone into due diligence. Out of that, we've probably issued 10 term sheets. Out of the 10 term sheets, we've closed 4 deals. That's in 2015. So our conversion rate from, you know, an opportunity coming to us to closing a deal is less than 1%. And that's a very rigorous process, right? So we hope that we've made good deals because we really look at the world in a different view. We don't look at it where the world stands today, where it stands in the future. And we look at for these very inspirational entrepreneurs that are here for the long run, that are here for 10 years, 12 years until they exit, if they exit, and to back, right? So we really look at that long-term view, and we have a lot of opportunities on our hands. So we really try to make sure that every single opportunity that's a good opportunity finds its way to us, and then we'll be able to make a very informative decision. So in 2016, we've closed one deal so far, or we've announced the closing of one deal so far. That's called Wrap Up, which it indexes where it solves the problems of minutes of meeting. So if you're in a meeting, it records the entire meeting and it indexes it. So you can search the meeting you can search the word Maryam, and wherever the word Maryam was said in the meeting, you can find it. So it's a searchable audio. We're in the process of closing a few more, but unfortunately we haven't announced them yet. You'll see them in the news very soon.
Okay, so that's actually, do you have any success story that you're proud of until today, or you still didn't see any fruit in the market?
I think it really depends on how we define success story, right? So I mean, I think in the ecosystem, usually success is defined as having an exit. We haven't had an exit yet, but we certainly have companies. So we are proud of every single entrepreneur, first of all, that we have in our portfolio, right? Because if we weren't, we would have not invested in them in the first place, right? And we're proud of them because every one of them has been working as hard as they can to really solve the problems that they came to us with, that they really wanted to solve, and we've been hopefully helpful in that process, of solving those problems together with them. And some of them have succeeded a little bit more quickly and have become, large enterprises such as, Kareem and Property Finder, which have gone on to really raise, further rounds of funding. In the case of Property Finder, they recently raised $20 million from a Swedish, investment company. Kareem obviously famously raised $60 million, which was led by, the regional private equity leader, Beco Capital. So, we definitely have some companies that are bigger and some that are smaller, but that doesn't mean that we consider the smaller ones, that we're less proud of them, right? Because I think those have successes in their own ways, and they have managed to solve problems in their own ways, and some of them become bigger, and some of them haven't.
So let me just kind of add to what he's saying. If you look at the US, the average time from start to exit of a successful opportunity is about 7 years. If you look at Europe, it's about 9 years. If you look at Southeast Asia, it's about 10 or 11 years. So it takes a really long time from kickoff until you successfully exit the business, whether it's an acquisition or IPO or a merger. So we're in the Middle East. We're not as advanced as the US, where the investment market is very active in early stage and middle stage, and the transaction volume is much smaller here than the rest of the world.
Exactly. I thought that in the Middle East, they usually say that the exit stage comes a little after 5 years.
Absolutely.
And when I was researching that, but in the US and Europe, it usually takes 7 to 10 years.
Yeah.
So it's kind of interesting, to see the difference.
And we've been investing for about 4, so give us a little bit more.
We'll do it again next year. Okay, so that takes me to the next question, which is, what boxes does Beco need to tick before seriously taking a target or investing in a target, and what do you look to avoid? I mean, what makes you actually seriously go with someone, and what makes you avoid?
Sure. So I guess, check the box to start talking. We have a very specific remit. We like to invest in early stage companies, meaning from seed to Series B. The sweet spot being Series A. They need to have a minimum viable product out there. So a product needs to be out there, and a complete team, or an almost complete team, needs to be in place before we start the conversation. So that's from a sort of a stage. In terms of a sector, it has to be in the technology sector. We are solely focused on the technology sector. And within technology, there are buckets that we like, but there are buckets that but we look at everything. But there are specific areas within the technology sector that we like. So from a sector, it's technology, and then from an investment amount, I guess, which is related to the stage. We invest anywhere between $300,000 to $3 million. So it has to be in that range for it to make sense for us. The last thing is geography. So we are very focused on the Middle East. We are only allowed to invest in the Middle East. But within the Middle East, we're very focused on a few countries. So we have the GCC is our main focus, plus Egypt. I think that's pretty much it. We look at Jordan and Lebanon as well. We don't look at North Africa, so Morocco, Tunisia, Libya. We don't look at countries in that area. So the geography is the third or fourth item. What was the second question you said?
And what turns us off? I guess obviously from from the perspective of what Yousef just mentioned, anything that doesn't fit into that pocket obviously is something we wouldn't be taking sort of into account when it comes to evaluating a potential opportunity. And we like to be very quick, right, when it comes to feedback, right? We respond to every single application that we get. So every single application or business plan that we receive, we respond to, right? Even if it's just with a quick email, hey, this unfortunately doesn't fit our requirement, thank you so much, and this is why it doesn't fit our requirement, but we want to get back to everybody, right? And I guess we can talk a little bit more also, like what kind of turns us off once something is in that bucket, and then we kind of go back to those four sort of things that we mentioned earlier. And team is really one important one, right? So like having a quick pitch, that really impresses us, like being exciting during the pitch, and not being defensive, being open-minded, there's many things that then start coming into play. But broadly speaking, really, if you don't fall into those buckets that Yousef just mentioned, we get back to you. We always do. We explain why it wouldn't fall into our remit. But that's sort of like we have to be focused.
All right, that's good. So, what key commercial terms does Beco seek from its deals? I mean, what are the main key commercial terms that you seek when you actually invest in an idea?
So I'm not sure what the person who asked the question means by commercial terms here, but I guess I'll explain what we like, from a legal perspective, or from an investment perspective. Like we said, we do $300,000 to $3 million. We typically we come in through equity. We don't do debt. We're not a bank. We'll come in certain cases in convertible debt that converts into equity at a later term, but equity is the main method of investment for us. We typically like to own anywhere between 10 to 30% of the company. The main reason here is it has to be a significant stake for us to continue to support the company and give time and effort, and at the same time leave enough on the table in terms of equity for the entrepreneur to continue to be incentivized over the long run to continue this 10-year journey. Any other terms that you think about?
I think I was under the impression that person may be asking for terms such as having a board seat. So obviously what we do when we come to an agreement or plan to come to an agreement with an entrepreneurial team is we sign something that is called a term sheet, which is a legally non-binding, yet respectfully sort of binding.
Ethically binding.
Ethically binding, I like that term, exactly. Ethically binding agreement between us or the investor and the entrepreneur that, hey, here's sort of like the head of terms, and here's like the things that are probably going to go into the legal documentation to define how we can work together. And there's obviously legal terminology in there that I think may not be now the best sort of like. We could do a completely separate 1-hour session just on that. Just a few things. And one of them that is really important to us is having a board seat. And it's really, I think, a lot of entrepreneurs are under the impression that like an investor such as Beco Capital is asking for a board seat because we want to control things. If you remember what I said earlier, is we said, would we follow this person into war? It's not, do we want to fight this person in war? And it's not like, do we want to lead this person into war? It's like, do we want to follow, right? So we know from the beginning on that we're not going to be sitting in the driver's seat. If we ask for a board seat, it is because we believe it is truly the best formalized way for us to add value, from a governance perspective, right? And having just those updates on a regular basis, sitting on the board and getting, the feedback on how things are going, on a monthly basis, and being able to say, hey, actually, I know somebody that might be, good for that position I'm hiring for, or actually, I know somebody at like that company and I can introduce you there. That's what we think that board seat is there for, right? So in terms of commercial terms, we would never put something into a term sheet, that would make us take control. That is not what we're in this business for. We're in this business because we love helping entrepreneurs, and our commercial terms should represent that, and ours definitely do.
If you think about it, the entrepreneur is Luke Skywalker. We are Yoda. So he's the star of the show. We're whispering on his back, trying to help him out.
If my colleague Smith was here, he'd be excited that you mentioned Yoda. All right. So for our next question, does Beco invest in seed or angel investing stages?
I guess brief answer. We are very different than obviously it's clear we're very different than angel investors. That doesn't mean that we haven't co-invested at the seed stage with angel investors. And so seed for us is really, there is, just like Yousef mentioned, there's at least a prototype. It's been tested in the market, there's some traction, and they have user feedback that says, hey, this is interesting. We want to back this and help this entrepreneur really build it out properly. So at that stage, we absolutely get involved, and our sort of like average ticket size at that stage is something around $300,000 to $400,000. So yes, we do, and we have co-invested with angels, and there's quite a few angels that we really respect and trust in this region, and we love working with them. But we would certainly not be doing angel investing deals per se, obviously.
Mariam, you mentioned earlier, like when I mentioned the first stage of investment is family and friends, and you said they invest in you because they trust you or they want to support you, right? Mm-hmm. So I think we have a different approach. We don't know the entrepreneurs that for 10, 20, 30 years, right? They're not brothers and fathers and cousins of ours. And we have shareholders who invested in us as Beco Capital, and we have a duty towards these shareholders to make sure that they have a positive return on their investment. So from an investment perspective, an institution such as us and our peers in the market, we have to do a much more stringent homework and diligence process when we invest in a company, as opposed to an angel, even if who finds charisma and connection between the entrepreneur and himself and sees the light in his eyes and invest, or versus a father or a cousin who actually just sort of does the investment for support purposes. So having said that, although we do invest in seed stage opportunities, if it was the right opportunity, our process of due diligencing the company is still as stringent as if it was a late stage company. So the company has to be ready to take or go through that process with us or any of our peers.
Okay, yeah. Well, we understand all of these steps that you have to go through before accepting someone. Well, actually, you mentioned something earlier that when I asked the question about what do you look for and what do you avoid, it was basically about geography, like you mentioned, that there are certain areas that you would focus on, such as GCC, Egypt, Jordan. But when it comes to actually sector-wise, does this takes me to the next question I have. Do all deals Beco invest in require to be underpinned by technology?
100%.
100%.
100%. Yeah, we only invest in technology. Technology is what we know. Technology is what we like. Technology is what we believe is going to get the region out of the slump that they're in. And yes, this is where we see the future. This is where we can add value. So for Beco itself, yes, it's only going to be technology.
Okay, so you prefer that sector, or is it that you only support that sector?
We only support it, so we definitely prefer it, and that's why we only support it. It's our investment remit to our shareholders. It's where we believe that this is the golden age for the Middle East in terms of the opportunity is in technology. So yes, for now it's only technology, and hopefully for the future.
That's good, because I agree with you guys. I mean, technology is happening now in the Middle East. Okay, so now I have a very long question that I might have to read out. So many PE, VC first claim to provide real impact to its portfolio companies. What are the key ways Beco provides technical managerial support to the portfolio of the companies? I mean, do you have any examples where you would actually, like for example, left an impact to the portfolio of the companies?
So, great question, long question, good question. Probably going to be a long answer, so maybe we'll split it into our answers. So maybe I'll talk a little bit about. I started talking a little bit about board seats and really being involved. I think the first thing again to mention is that we're not the driver's seat entrepreneurs, but we're always there to help with a few key sort of functions and needs. And in fact, we actually hire for those major needs, like Yousef introduced Beco in the beginning, saying that there's 6 investment professionals and there's also 6, operators that we have at this company that help with some of those functions, right? So one of them is hiring. So one of the biggest challenges that a lot of entrepreneurs have is finding great talent in this region and retaining that talent. And we are constantly on the lookout for great people in technical positions, for great people in marketing, for great people in design, and we actually have a weekly process where the investment team, so Yousef, myself, the partners, right, get on a call with great applicants that just reach out to us and send us their resumes, not even knowing where specifically they would want to apply, and we just say, this guy has a great profile, or this girl has a great profile. I think she could be really good for XYZ company. Let's get on a quick call. Let's talk to him or her and evaluate whether they would be interested in working, for example, for Kareem or Property Finder. And then we make this introduction. So we really go out there and become, we interview for our portfolio companies. And we are actually going to soon hire somebody that is going to do that full time at Beco Capital. So if one of our portfolio companies, such as WrapUp, which is a young company, is hiring a lot of people, needs a lot of technical people, is looking for a back-end developer, they can just reach out to our full-time, person that has been doing, this job, at other companies. The entrepreneur from WrapUp, Rami, can reach out and say, hey, I need a great back-end developer. These are the requirements. Can you find me somebody? And they go out there and they help them with finding them. They organize hackathons for them. So this is one of the things, one of the areas that is really a big challenge for a lot of entrepreneurs that we want to be, helpful with.
Yeah, I mean, so the key term here is functional experts, which Beco mentioned, and Sorusch mentioned, and he talked about hiring. Some of the other key areas that a lot of our entrepreneurs and a lot of our portfolio companies need help with is sales and distribution. A lot of companies, especially tech startups, come in 2 forms. You have the tech guy or the CTO and the product visionary who's the coder sitting behind building the product, and then you've got the CEO, co-founder, who's the business front, who's the person who's kind of building all these other partnerships and building the front end relationships and linking with the future partners such as ourselves and any other entities and licensing and all of that. Sales and distribution is a combination between an art and a science from the outside, and a lot of people think of it as a more of a charismatic art approach, but it's also that it's extremely scientific. And that's so we have an in-house sales and distribution functional expert who helps our portfolio companies set up their sales organization from scratch, from looking at what gap in the market are you filling, what are the benefits of your products, what are the features of your products, and how to pitch it to your different stakeholders, how to communicate it to the macro world and the micro world, and at the same time, how do you scale this organizational departments? What are the targets and the KPIs for this department for each individual salesman? And that's something that we found extremely useful, especially as companies grow from, we're 3 to 5 employees, we're collaborating with each other. I can communicate with the CEO very easily and the marketing very easily. To 30 employees, 100 employees at scale, you need a lot of systems and a lot of data to really manage your sales and distribution channels really well. There's one more.
Yeah, I guess the third one that is again a functional expert is for the function of marketing communications. So really, to kind of summarize it up quickly, is the 3 big areas that we have identified at Beco Capital, at least, that are big challenges for a lot of entrepreneurs, at least in this region, but also globally, are recruiting, and then we mentioned sales and distribution, and the third one is really marketing and how to do good PR and how to get the right branding and how to do the right marketing and how to do SEO. And we have somebody at this at the company, Serene, who's doing a fantastic job with this, helping both Beco Capital, but also really mainly our companies. And she is on a daily basis, at the offices of our portfolio companies, sitting down with their marketing managers and their CEOs and saying, hey, here's a few suggestions on how you can improve your outreach. Maybe, we can help you get an article published here, or maybe, try this wording, for the marketing message, and, see and A/B test that. So we have somebody that really has 100% focus on going to the offices, and she really spends half her time not in this office. She's out there in the office of our portfolio companies and sitting down with the marketing managers and saying, how can I help you? And obviously this has come from somebody who's been doing this for quite some time, so she has a lot of experience with it. And a lot of the entrepreneurs that we're investing in, frankly, they're young, hungry professionals that have a great idea, that are hopefully great leaders, but that are hiring more young, hungry people that have the drive, but not necessarily the experience necessary to know where to apply that energy. And so what we want to do with these functional experts, specifically in marketing, is to bring somebody who's been doing this for quite some time and help them a little bit sort of focus their energy in the way that is going to have the biggest impact, specifically when it comes to these 3 big challenges that people have.
Very interesting. Since we are running a bit short on time, so I need you guys to take the next 4 questions a little bit quicker, yeah? Have you noticed any trends with investment in the GCC reflected in the term sheet? Any key terms that keep popping up?
Honestly, no. I think term sheets are very investor specific. Each investor has a different set of terms that they are comfortable with. And that changes between investor and investor and between the stage and even the sector. So we haven't seen any trends that have been shifting or changing. I think things are, each investor has terms and they like this. So no.
Yeah. I know we want to keep things short, but just a quick note on that. So I agree with Yousef that maybe there hasn't been a trend, but let's put it this way. If there was one, we would like to set it, right? And I think one of the things that has happened in this region is that a lot of investors weren't necessarily very sort of savvy in this space of technology and technology investing, and were more used to sort of more traditional investing, where they like to have control, where they sort of have very stringent liquidation preferences. And so, for us, it was important to sort of make a point and say we want to be as entrepreneur friendly as possible. Now, obviously, everything has to be within reason, and we have to have certain sort of terms in there that allow us to really manage an investment, because that's really the mandate that we have from our own shareholders. But at the end of the day, we want to be as entrepreneur friendly as possible. And I think if there was a trend, it would hopefully be the one towards more entrepreneur friendly terms. And this is something that we are very passionate about, that one of our partners, Amir Farha, is really giving presentations on. We want to set that trend.
Okay. Okay, so if you had to turn the table, what are the key terms you would seek from an investor, given the environment and your experience in the GCC?
It's a very tricky question.
Yeah, I agree.
Yeah.
So there's a very famous quote that that says, you set the valuation, I'll set the terms, and that's you being the entrepreneur, me being the investor, right? So there's a lot of terms. Actually, if you go to our website and another blog, there's a blog post that's called Bad Terms,
yeah,
I believe, which Amir Farha, one of our partners, posted about. So there are a lot of different terms that I wouldn't seek, but I would necessarily actually avoid having it in my cap table or in my shareholders agreement as an entrepreneur, if I'm thinking as an entrepreneur. Yep. So a lot of it is the level of control that I give away, and making sure, if I had to look at the main one, is I need to make sure, if I was the entrepreneur, that I control the board, at least in positive scenarios. So negative scenarios, the investors want to protect their rights, so there is definitely negative controls at a board level, or reserved matters for investors. But from a board perspective, you want to have the board to support the company and move the company as quickly as possible. And the entrepreneur usually is the majority shareholder in the company. He's the guy who's spending 100% of his time on the company versus the investors who are spending 10% to 5% of the time. So you want to make sure that if I'm the entrepreneur, I want to make sure that I control the board, at least in the operational perspective. A lot of the other terms, I think they're too detailed to get into, but it's giving up control that I would really worry about as an entrepreneur in positive situations. So if a company is doing well, I continue to control it. If the company does not do well, as an entrepreneur, I would allow the investors to step in and take control. That's in summary.
So do you believe, like, for example, if we're going to turn the tables back, as investors, do you sometimes have reservations against the entrepreneur, thinking that they're not investing enough time or effort into the business?
I mean, let's put it this way. If the entrepreneur is not working full-time on the business, we're not going to invest.
Like I have to jump in because I'm from the GCC, and this gives me heartburn. So many entrepreneurs come to us asking for funding, and they still have a full-time job. They haven't quit, and they're still not focused. If you believe in your business, absolutely, and you're actually asking me and Beco and other investors to believe in this business by putting money in it, you haven't quit your day job yet. You have to be all in 120%, and it's your baby, not mine. So I think this is something that we come across a lot, and it's a cultural thing. We're in the Middle East, خاصة جهة الخليج, we're traders. We like to do things, quick, in and out, and we want to do 3-4 things at the same time. You got to focus, you got to commit, you got to do things at 110%, and then people will start believing.
Yeah, that's excellent. Okay, so what negotiation no-nos would you highlight to founders in discussions with investors? And what are the key mistakes or expectations you find founders make or expect? We do always discuss this as it is somehow related to the previous questions. There are certain things that, for example, the investor seekers would actually do or say that you would actually give them the X. So do you actually face this?
I think, to be very honest, I'm sure we could give many examples, but if we had to summarize it, I think Yousef summarized it extremely well in his sort of like previous answer when he said, you set the valuation, I set the price. You said the valuation, I set the terms. It is a lot of entrepreneurs sort of are trying to optimize a lot of times, unfortunately, for the wrong thing, which is the valuation or the price of the company, because they like the sound of it, right? They like to say the prestige, exactly, of like, so and so company raised at a $10 million valuation, and they like that idea of hearing that and telling other people about it. And I think this is sort of one of the things that we have encountered in certain negotiations where an entrepreneur gets into a room and says, "That's my price." And they would basically take many terms they shouldn't take just to get that price. And that shows me that an entrepreneur is really optimizing for the wrong things, because somebody who thinks long term is going to realize, listen, I need to have certain control points, just like the ones that Yousef was describing myself, in order to really drive this business, and I don't want to get diluted that much, but I need to get diluted enough to be able to give enough stake to somebody else to help me to build this into a big, valuable, and impactful business in the long term, right? So these are some of the things that when we see an entrepreneur try to optimize for short-term outcomes, right? Say, you know, I have to have this salary, you know, and it's like, okay, you're at a startup. You know, are you expecting to get 50% of the money you're raising as the salary just for you as the CEO? Like when we hear things like this in those conversations, it's definitely a red flag.
I mean, I would definitely say be rational. It's just as simple as that. Just if you look at yourself in the mirror, or you sit in front of your father or your cousin or your boss and ask them this request that, okay, I want you to invest in my company, and the company is valued at $10 million. Why is it valued at $10 million? Well, because there's this company that's doing the same thing in the US and then valued at $1 billion, so I should be valued at least at a $10 million. That doesn't make any sense. So you have to be rational, and you have to feel, just bring common sense to the table. I think that's the no-nos of negotiations for us. We're very flexible, and we'll understand. Be rational.
Yeah, this actually takes me to another two questions, which are: have you ever faced a situation where you had an investment seeker who was actually not the original idea owner? And the other question is, which is something that we can see, have you ever had someone pitching to you an idea that was actually not feasible in the region?
These are great questions. Should we start with the first one? So, it's a tricky question because it sounds quite hypothetical, right? That we would, you know, talk to an entrepreneur who's pitching an idea that is actually not theirs.
So, does that mean
exactly
it's an advisor that's pitching to us, or is it like he stole the idea?
Those are the two scenarios I had in mind.
Yes, advisor pitching to you, or a representative, let's say, or in some cases, some people have their business plan written for them. So have you ever went through a situation?
We have certainly encountered that, and this is now I have to sort of, Yousef had sort of like that moment where he was like, I have to say something about this. This is my moment now where I feel like I really have to say something about this. I personally am not a fan of that at all. At the core of it, building a business is a very creative undertaking. It is a huge creative challenge because, you know, if you think it's difficult to write, you know, a blog post from scratch, or to, you know, or to write a book from scratch, just think about what it takes to come up with an idea from scratch and build an organization around it. It's a very creative undertaking. And if you haven't been able to write your own business plan, and if you're not able to go out there and pitch for yourself, then I don't think you are the right person to actually build that business, right? So, you know, for me, it is part of the job. You know, of a CEO's job is to go and raise money and tell that story, not just to investors, but to your own, you know, staff, right? So if you are having difficulty writing the business plan and going through the thinking process and the learning process that an entrepreneur goes through when he's writing a business plan, if you haven't done that yourself, you clearly don't care enough about doing that business and being a leader and telling that story to both investors as well as potential employees, as well as, you know, potential clients or partners, right? So I have huge hesitations about, you know, advisors approaching us, or, you know, people approaching us and saying, hey, I hired a person to write a business plan. It's like, for me, a massive red flag.
Yeah, for example, I mean, it's if you can't manage to actually write your own business plan, how would you manage the business, you know? And sometimes I think that in situations like that, the business owner wouldn't actually know how the business has to operate, or what are actually the steps to take. I mean, the process to actually turn their idea into reality. You know,
let's put it this way: that this is really important. This is a really important point, because the process of writing a business plan, it is not necessarily for the purpose of having, you know, a blueprint that you can say, this is exactly what I'm going to do. It is
Yeah.
the learnings that you get from writing the business plan. And it's going to change. It's probably going to change on a regular basis, and that's perfectly fine.
Exactly. I call it a thinking process,
And by the way, that applies as much to the process of writing a business plan as much as to the process of talking to investors, right? I mean, one of the things that Yousef and I always talk about when it comes to entrepreneurs is like, okay, was this entrepreneur after a pitch meeting? We asked ourselves, was he open-minded? Was he receptive to feedback? Was he collaborative in his approach, or was he defensive? Right? And we really like the first kind, right? Like the person that comes in and says, listen, this is as much a learning opportunity for me as an opportunity to raise funding. So tell me what you think, and they allow us to really think together and collaborate with that entrepreneur and give feedback. And the best entrepreneurs say, hey, you said those two things I already thought about. I tried and didn't work out. That third thing, great feedback. I didn't think about it. Let me go back and try to do it in my own business. And I'll come back to you and say if it worked. I mean, those are great entrepreneurs. They want to learn at every process. And somebody that is outsourcing either the pitching or the raising of the funds or the writing of the business plan is not somebody that is hungry to learn as much as possible about their business to build something that matters.
Yeah, exactly. Again, I'm actually extending this question for a very long time, but I need to ask you this question. What is your opinion about business plan versus business model canvas?
I mean, like, I'm probably the wrong guy to ask. I think both are serve the same purpose. You're trying to identify what is your business and how are you going to make money, and what are your costs, and what are the different items that you need to build or categories that you need to build for your business to be successful and scale, right? So I think they both. I mean, it's just a wording or a naming difference. I think as long as well, here's my product, here's the problem I'm trying to solve, here's how big the problem is, and this is my product that's solving this problem, and I'm doing it X and Y, Z. That's what we like to hear. Whether you present it in a business plan that from a software that you bought online, or you download the business plan canvas and you print it out, it doesn't make a difference. I think the core has to be the core, which is what is your product, and then all around problem, solution, team, scale.
Okay, and how about the part where in a business plan, it says, I mean, you would have to actually mention the feasibility of the projections. I mean, is it feasible to actually provide projections in a business plan?
So, and I'm sorry, and
I mean, when it comes to actually writing a business plan, is it feasible to actually have projections?
Take it a step back. Yeah. Writing a business plan a lot of people take it as, this is download the software or kind of go through the process. Here's 1, 2, 3. And in my opinion, that's not it. The business plan is, really identifying that market gap. Here's a problem. Here's how big that problem is. And here's how I'm going to solve it. And that solution has to be kick-ass, yeah. Right? And that's really, and we're the kick-ass team that's really going to take that solution. So for me, this is what I really like to focus on. In terms of forecasting financials, I think it's important for you to really going back to what Sorusch said, counting noses, to really identify how big your market is and really understand what are the costs associated with serving that market. Mm-hmm. I really would prefer to focus on unit economics rather than total forecast. And unit economics means that the problem is people aren't able to erase what they write. So here's a pencil, and you can write and you can erase. It costs me, whatever, $1 to produce this pencil, and I can sell it for $2, including all my marketing and sales and production activities, and there is a margin here. So at unit economics, I'm positive. I think that makes a lot more sense rather than saying, well, in 5 years I will own the GCC market and I'm $100 billion, and it's $100 billion market, and I'm gonna take 10% of it, so I'm at $10 billion. That's the forecast.
Very positive forecast. Okay, so let's go to our last question of today, which is do you believe that the GCC legal environment provides favorable financial terms for founders? I mean, that wouldn't be possible elsewhere. And if so, what would those be?
Do you mind if I sort of ask a quick follow-up question? What do you mean by financial terms? As in, like, availability of capital?
Availability of capital, yeah.
Actually, I would like to defer. I would like to defer that question to Yousef, because he just wrote a fantastic blog post. Whoever's watching this should really go to Beco Capital's website, www.becocapital.com. Just go to the blog section, and just read it. Calling Arab investors, and so Yousef has done a lot of thinking and writing on this. So I think he's gonna give a great answer.
Just because a quick summary of your article.
I think he overhyped it. I don't think I've done that much. Look, I think the regulatory system and the legal system in the entire region is not up to par. It's not 100% there yet when it comes to not entrepreneurs, but in terms of this, venture capital stage. Young companies, growth mode companies. I think it's slow. I think there's a lot of red tape. I think there are a lot of limitations. Investors like preferred rights versus preferred shares versus common shares. There's lack of bankruptcy laws. All that stuff is there, or it's missing from the region, and that's why there are a lot of solutions for that. And you can set up in Cayman Islands or BVI, and then or any of other international free zones where the investors would get the rights, and then you can continue to operate. There are still limitations and a little bit of slowness, but I think legal and regulatory systems are the least of your worries as a startup. You'll be able to set up quite easily. You'll be able to set up in a cost-effective manner, and I think if you're doing well, you're going to do well. It's all about the operations. It's all about the business. I always hear a lot of complaints about the legal system. We're not 100% there yet. There are a lot of developments that are heading in that direction. And it's really not, I don't see it as that big of an obstacle today.
Okay. I know our time is running out, but I have two more questions that I'd like to squeeze. So if you guys don't mind.
Where are they coming from? We've only seen 14.
I have one question. I'm going back to the question where we said about business plan. I mean, having someone to write your business plan. Yeah. Just going back to that, I mean, do you actually believe that I can seek help from someone to help me write a business plan rather than not actually having it written for me? I mean, is it possible for someone to actually write their own business plan without taking advice or seeking help from anyone else?
I don't think that would even be a good idea to only write it yourself and not have anybody take a look at it to help you, right? I mean, if you think about it, then I'm going to go back to the example of writing, right? If you want to write a book, it's probably not a great idea to just write the whole thing and just publish it and then I sort of like have the public see it, right? You want to have an editor. You want to have somebody read it and say, actually, what did you mean here, right? Because what happens a lot is, and especially with entrepreneurs who are extremely passionate people, is that we kind of like, during that process, of starting up a business, coming up with an idea and writing a business plan, you're kind of in your own world. And that world sometimes might be a little bit distorted in terms of like reality. And sometimes that's a good thing because you want to change the current reality. You want to change the status quo. You want to have that transformational solution. But it also means that sometimes some of the things that you imagine are going to happen may not happen entirely the way that you think they will, right? Whether that is, your distribution channels might not be the ones that you think they would be, or it is, your branding and marketing is not going to be the way that you think it's going to be. It's really important to get somebody, to take a look and say, hey, what did you mean here? Have you thought about this? Or, what if you write it like that, And have you done a little bit more research here, right? So I absolutely think it is actually instrumental to have somebody, help you with the process of writing the business plan. But, while that person is not going to do it for you, you do the work, you do the learning, and have somebody every once in a while give you a reality check, right? That's how I think of it, So having an editor.
You can actually seek help.
Absolutely.
And write to the business plan.
And we recommend it.
Yeah, exactly. We absolutely recommend it. I mean, Reid Hoffman, founder of LinkedIn, sort of always tells the story of when he founded LinkedIn. But when he was actually thinking about fundraising, he said, I went and I invited one of my smartest friends to a lunch, and I said, here's the idea. Just tell me what you think. And he said, if all of them would have said it's a great idea, I would have probably been concerned, because then it would have been too obvious. If all of them would have said, oh, this is a really, really dumb idea, you should not do this, I would have also been very concerned, because maybe it's either way too early or it's just not a great idea. But he got what he wanted, right? Because he got really smart people that know him extremely well, that know this space really well, give him valuable feedback. Some of it was positive, some of it was negative, and he took it in and created a pretty valuable company that sold for a few $1 billion to Microsoft. So
I think we took the business plan subject way too far. Okay, one last question, yeah? Do you actually value someone that comes alone versus a team?
Great question.
Definitely a team, right? I mean, it's probably one of our, if we see sole founders, that's probably the number one risk that gets flagged immediately. The main reason is, well, there are multiple reasons, right? First of all, I think it's a very rough road. It's a very long road, and you need to have that balance between, who's motivated now and can pick up the other person, or the rest of the team, and kind of go. But if you look at companies that are in our part of the world, or in technology, or in the tech sector, you need somebody who's going to be front end, and he's going to be able to raise funds, and he's going to be able to build partnerships with and build relationships with customers and consumers. And then you need the techie who's going to be able to build a product and test it and develop it and scale it. And then you need somebody in operations, because it's a very technology in our part of the world has one leg digital and one leg in the real world, and you need that ops person that will be able to bring in the company together. So I'm not saying it's one or two or three, but I'm saying you need to have a team that has a complete or a founding team that has a complete skill set. Usually a single person, a single founder, if he's techie or he's the tech person, he probably doesn't have the front line capabilities or skill sets in pitching and in bringing on investors, in building teams, in leading teams, and building a culture and organizational culture. So you need to have a complete skill set. So we really prefer that over a sole founder.
Excellent. Thank you guys so much. I really appreciate your time. I know we went 3 minutes overboard, but I hope that for all our viewers that it was very informative. And again, thank you guys for your time. It was a very
Thank you for having us. It was a lot of fun.
For my side, I have learned a lot today. And don't forget your promise next year at the same time. We'll have another discussion, and hopefully we'll have success stories by that time.
Absolutely. Inshallah. Take care. Ma'as salam.
Take care. Thank you, Ma'as salam. Thank you, guys. Thank you for all our viewers.